Today I'm going to show you how I'm finding Bitcoin's real patterns using 4 different methods. 1. Experience. 2. News and market sentiment. 3. Monetary policy. 4. Technical analysis. Hey guys, welcome back to another video on the M.M.C channel. Alright, let's jump right back into the video. Seriously, hit that like button and send this to anyone who needs to see it. This video was honestly really hard to record. First, let's start with experience.
When I say we're reaching a bottom, that does not mean you should just buy Bitcoin. We're not looking for the perfect price. We're looking for the right time. For example, Bitcoin at $16,000 wasn't necessarily important just because of the price. What mattered was when you bought. The right time means entering when the market has a good chance of moving higher afterward, instead of having your money stuck in a position for months. One of the biggest risks for a trader is holding an asset for way too long while the market goes nowhere. Think back to 2022 and 2023. There was a point where almost nobody wanted to be in crypto anymore. People were frustrated, tired, and completely losing interest in the market. And honestly, people usually give up much earlier than they should. Another thing I want to look at is miners. Miners are some of the biggest sellers in the Bitcoin market, but at the same time, they're keeping the network alive. Bitcoin's blockchain depends on miners, and they'll keep operating as long as mining remains profitable. Older mining machines can become unprofitable when electricity costs get too high. So we can use mining economics to estimate where Bitcoin could find strong support. Right now, the global average mining cost is roughly around the $37,000 to $45,000 area, depending on electricity prices and the type of equipment. So if Bitcoin comes down into the $37,000 to $45,000 range, from a pure price perspective, that becomes a very interesting area. But remember, that's a price zone, not a timing signal. And I'm pretty sure some of you are already getting bored and leaving this video.
Seriously, don't do that.
Now, let's look at news and market sentiment. Sentiment basically tells us how much attention people are paying to a market. For example, on the block, you can go into the data section, then alternative metrics, and look at social data. Here we can look at Bitcoin related searches and Wikipedia traffic, and you can see that interest has been declining.
Even the subscriber counts of YouTubers covering this market have been falling, including mine. Yeah, apparently the bear market decided to take my subscribers too.
But seriously, when attention starts disappearing, that can be an interesting signal. You can also look at the number of tweets and discussions about financial markets. When that activity keeps getting lower and lower, we often see this kind of behavior around major market bottoms. These areas are often called accumulation zones. If you want me to make a full video explaining accumulation and distribution zones, let me know in the comments. So here, we're looking at Bitcoin's past on a quarterly basis. As you can see, all of 2022 was negative. We already know that a bunch of different events happened that year, and when they all came together with the crypto market, it created this absolute disaster. Of course, we also know that with futures, you can potentially make more money from these kinds of drops than from the upside. But people who were relying on spot trading that year, yeah, they were pretty much screwed. Oh, actually, I just remembered, if you guys want, I can make a video showing you exactly why I think futures can be better than spot. Now, look at what happened in 2022. We had the Russia-Ukraine war, aggressive Federal Reserve policies, rising interest rates, the collapse of Three Arrows Capital, the Alameda research situation, and then the FTX collapse. Many of these problems didn't actually come from inside crypto. They were external factors affecting the market. And today, we have another major force pulling money and attention away from crypto: AI. Another metric we can watch is negative sentiment toward Bitcoin. On this 5-year chart, you can see that during major sell-offs, the number of negative comments from well-known people increases. But around major bottoms, that number starts falling again. We can see something similar in 2025. Negative comments increased during the sell-off, and now that number has started coming down. For a major long-term trend to begin, not just a small move on the 4-hour, 1-hour, or 15-minute chart, we usually need fundamental catalysts. Fundamentals are basically the fuel behind major market moves, and that brings us to monetary policy. Interest rates are one of the most important factors affecting financial markets. Generally, higher interest rates put more pressure on financial markets, while lower rates create a more favorable environment for risk assets. The United States is one of the most important countries to watch. If you look at previous Bitcoin cycles, you can see a strong relationship between Bitcoin's performance and changes in US interest rates. When rates started coming down, Bitcoin eventually entered stronger bullish periods. And when rates were aggressively increased, financial markets came under pressure. Now, let's talk about Japan. Japan had extremely low, and for a long time even negative, interest rates. Eventually, inflation became a problem and Japan started raising rates. So when would we have a stronger environment for a major market bottom? Ideally, we want to see major economies, especially the US and Japan, moving toward lower interest rates. But there's a problem. With the current economic situation, geopolitical tensions, rising oil prices, and declining oil reserves, inflation can stay elevated. And when inflation stays high, central banks have much less room to cut rates aggressively. So one thing I'd watch very closely is a combination of falling interest rates and falling oil prices. Now, let's move to technical analysis. This is where everything comes together. Based on the data we just looked at, the $40,000 to $44,000 area is extremely important to me. If Bitcoin comes down into this range, from a pure price perspective, I think it becomes a very interesting area. But again, I'm not saying to blindly buy. You still need proper position sizing, a stop loss, and risk management. A lot of people already know about this area. Everyone could be thinking, Bitcoin hits this zone, I'm buying. And that can actually affect how price behaves when it gets there. So what's another important zone? The $50,000 to $54,000 area. From a price perspective, I also really like this range. If Bitcoin comes into this area, we can look for a setup, but we still need a stop loss. And what happens if our stop loss gets hit and Bitcoin immediately goes back up? Simple. We wait for the market to break the previous high and look for another setup, again with a stop loss.
And what if Bitcoin just keeps going higher from here? Well, it's already doing that.
Then you should actually be happy. Because if Bitcoin continues higher, we could start getting some positive catalysts that bring more life back into the market. And then we can use our strategy to trade the breakouts of important highs. Bitcoin has already made a pretty strong move and it could continue. I'll explain what I'm looking for next in future videos, so make sure you subscribe. Of course, there was also a potential entry we could have taken right here. I've collected all the information I'm using and I'm putting it here on this channel. So if you find this content useful, support the channel.
I've collected all the information I'm using and I'm putting it here on this channel. So if you find this content useful, support the channel. Maybe we can help a few more people avoid unnecessary mistakes and losing money. Stay tuned. Good luck.